today. It's amazing. We discussed how the markets are really pushing higher. What in April we had. We're getting this terrible jobs report, and it's just wild. What's going on here?
Well, it's good so far. So in terms of the market, Nicole, we've obviously seen a tremendous bounce off of the March lows. And a lot of that to me has been FOMO, with fear of missing out, and momentum buying on top of that. And then short covering has been pushing all of it up. So about 65% of this rally has been the product of short covering. That's an awful lot of ammunition that eventually will die out. I like the fact that the market's going higher. I like the fact that it's gone past some of its resistance points. I like the fact that there's now some support under the market, but I fear, Nicole, that the weight of the economy, such as the numbers we saw today, is eventually going to catch up with the market. And I don't think we're done testing the lows or actually possibly making lower lows. So far so good, but I don't know that this momentum is enough to keep the market up here where it is.
You're blowing my mind. You're telling me you think that 65% of the rally is short covering? So just folks, so they understand that. I mean, you have to just quickly give a sentence that's not people thinking things are going higher. That's people covering. Explain that, Shah. Is that right?
It is correct. The numbers are panned out. I've looked at them 8 ways to Sunday, and that's really what it looks like. It's a very large number, one of the largest short covering rallies I've ever seen. What happened was, as the markets fell from late February through March, a lot of investors were betting that the market would continue down and we would see much lower lows, because nobody knew what the pandemic was, where it was going to go, where it was going to stop, or if it was going to stop, or how bad things were going to get. And no one knew how to value the securities. So a lot of investors, a lot of traders, big traders, institutional desks, hedge funds were shorting the market, betting that they could sell shares down, buy them a lot lower, and make a profit that way. They got caught. When the market turned on March 24th, literally on a dime, nobody really figured out we would see the kind of rally we saw. So all the way up, more investors started to say, that's the end of the rally. We can't go any further. They start to short again. Markets would go higher. They start to short again, betting this is the end of the rally. And they've been wrong all along. So there's a lot of buy-side ammunition in terms of that short covering. That followed by fear of investors missing out, because if you miss the lows, you've missed a tremendous opportunity.
What's going on here? What are the Momo stocks and some of these tech stocks that you like? Because I know you think that the market's a little bit lofty.
Well, the momentum stocks, the Momo stocks, are all of the big names we know, the mega cap tech stocks. And they have momentum for all the right reasons. Investors are plowing into them because they've got the earnings, they've got the growth, they've got the cash flow, they've got the piles of cash. They've got everything right. They've got these moats and ecosystems that they can keep growing. Even in the coronavirus crisis environment, they're growing. They're growing their top line and their bottom lines. So yes, they make a lot of sense. What's worrisome to me is they have brought the entire market, all of the benchmarks have risen because all of these big name caps are in each of the major benchmarks, whether it's the Dow, the NASDAQ Composite, or the S&P. And their weightings and their price weightings in terms of the Dow is creating this giant momentum ride up, and the rest of the market is not really rising.
So you're trading in and out. Explain how you're doing this. I mean, I know you're not buying these for the long term, right? So you're not just buying these. You're trading in and out. You specifically said you like especially Microsoft and Amazon. So you're getting in, you're getting out, and you're trying to make money that way. Do you have certain levels? How are you doing this?
Well, I like to get in when I think the market's coming down. If it's come down, we have a bad, ugly day, and we've had plenty of those. I like to buy on those kind of dips. And if a market keeps going lower, and it's a kind of position that I really want to hold longer term, and right now I'm not sure I want to hold anything long term because I don't know what long term is right now, then I would buy, normally I would buy more lower. But the market goes up and I have a 15-20% profit in a stock or several stocks, I'm going to take that, pocket that profit, and wait to see the market come down lower, which I think it's going to do eventually. And then at some point, Nicole, I think we're going to see a bottom. And when that bottom comes, I'm going to load up the truck.